So it's live now on Facebook. So we will. I'm gonna broadcast and let people come in and do some quick sound check, and then we are going to
can see my
roll. Yeah, your slide is showing fine, and it's actually very nicely done.
Okay, so I'm going to share something that is on the lighter side, and I'll show some statistics. But I think this presentation is more of like sharing more of like to people who have not really been investing in industrial properties. So just to show them what are the options available, and it does make a lot of sense, and
yeah, that'd be great. I've done many webinars about properties, but we have never touched on industrial property. So I'm so thankful that you can do this for us, right? You have so many decades of experience, investing yourself in there, and then you help your clients also purchase all these kind of properties, and do the transaction. So make sure you leave your phone silent, and we are going to do a quick sound check, and we're going to start soon. So everybody, if you can see the screen and then you can hear me, or just type in your location right now. Just type in something. I'll call out your name, and please type in something like your location. Don't tell me you're at home. We know most of you are at home. Adrian, Akil, Alvin, Brandon. Yep, I call out your name. Just type Irene, JJ. Type in the chat box your location, like Cam, Jordan. And those who are watching on Facebook, can you also give us some response and type in something in there? Okay. Type in the comment, let us know where you're logging in from right now. So great, everything is working. Thank you very much. And before we start, I'm just going to do a quick poll to let you guys interact a little bit. So do you own any investment property other than your primary home? If you have like the second property for investment, or even your first property is in fact for investment, not for own stay, you can choose yes. If you don't invest in any property, you can choose no. And do you own an industrial property? So if yes, no, just put it in. So I can see that's one vote on there's just one person who own an industrial property. Is that you, Adrian, who cast that vote? Your mic is mute though, Aldrin.
Sorry, okay, I have just answered the short survey.
Oh, okay. I see. Right. Just one person say that he has owned industrial property. Oh, now got three. Okay. Yeah. So it's not just you. There are some people too, right? Okay, awesome. I'm gonna end the poll. I'm just gonna share the quick result for you guys to see. So you can see right on the screen, do you own an industrial property, investment property? 73% say yes. Oh, good. And then do you own industrial property? Only 4% say yes. So I'm gonna stop sharing, and we're going to start the session. And Aldrin here, he's a heavyweight. He invests quite frequently, I would say, in industrial properties. And he also helped, I guess, countless customers, his clients, do transaction on the industrial properties. So that's why I'm begging him, Aldrin, can you come on my show, do this sharing about industrial property, because I couldn't find anyone to talk about this. And thanks a lot for coming on. So guys, you are in for a treat, and pay good attention for the 30 and 45 minutes that he's going to share. And then we're going to do a quick Q&A. So Aldrin, take it away.
All right. Okay. Good morning, everyone. Thank you so much for joining, and thanks, Casey, for inviting me in your webinar. Okay, as what Casey has mentioned, I've been investing in industrial properties. I wouldn't call myself heavyweight. There's always a relative. A lot of my clients are having a lot more portfolios. All right. It's just that I started investing in properties, and particularly in industrial at a very early stage I think in 1998. Just a bit of my background. I'm a real estate agent. I started being an agent back in 95. Before that, I was an accountant, and I was telling myself, nothing wrong with being an accountant. It's just that I don't want to live my life for the rest of my life counting people's money. All right, so so I jumped right in 95. I came back from Australia and went straight to become a real estate negotiator. You know, just I think some of you over here, I can see some familiar names. Investment is always timing. So when I started much earlier, I think probably about 20 over years ago. So there was about a few wave that we are able to capture, so to speak. All right. So okay. So what I'm going to share today is something rather light. As what the survey has said, only about 10-11% of the people online actually invested in industrial property, and this really correlates with some of the statistics that I'm going to share with you. All right, so let's start. Okay, so sharing for today will be I'll be sharing investment opportunity in industrial properties that are often being overlooked. Second will be different types of industrial properties that have proven to be profitable. Third will be common pitfalls to avoid when buying an industrial property. Fourth will be economic lifespan of industrial properties, very important. The fifth will be change of usage and multiplying effect of industrial properties. So let's start with the first. All right, investment opportunities in industrial properties are often being overlooked. A lot of people say a lot of things about industrial properties. You know, one of the very common thing is number one is a very niche market. Number two is out of reach for a lot of people. Okay. Number three is they are not familiar. There is no awareness on investment in industrial properties. And when a lot of my clients, I used to have a lot of clients who do not even invest in industrial properties. They will be sorry, let me just off my phone. Just give me a second. All right. So a lot of my clients, they have not invested in industrial property. When I propose to them, I was telling them, you know, why this is a good investment. So they start doing their homework and they drive around and they go to industrial park. And the very common thing that they will always come back will be, wow, Aldrin, how come all the shutters are closed? You know, that I don't see anyone walking on the 5-foot pathway. So there's a lot of myth. All right. And yet industrial sectors is faring quite pretty well. I'm going to show you some statistics. So let's start with some statistics. All right. Okay. Number one, very simple, just a comparison. The volume of transaction. This is I extracted this from NAPIC. Now, in terms of the volume of transaction of 2019, residential volume of transaction and against the industrial commercial. I did not put the exact figure here, but this graph will just show you that the industrial commercial, what you call transaction. NAPIC do not differentiate between the industrial and commercial. They just put that industrial and commercial. Is only about 10 to 12% of the volume of transaction, as we compare to residential. So again, I think that statistic hold, you did a bit of a survey, Casey, only about 12% who actually owns industrial properties. All right, so that is a volume of transaction I extracted from NAPIC. That is for 2019, and over the last 5 to 8 years, this trend has been very consistent. So the whole market, only 10 to 12% of the property transacted are industrial and commercial. Then let's look at the total value of transaction. Pretty similar as a volume, as what you can see. I did not do a graph to show you the differences between the value and also the volume in terms of residential and industrial. However, you see there are a smaller gap over here. So yes, generally, averagely, industrial property is so-called slightly bigger ticket item, but it's really not out of reach for a lot of people. In fact, it's very well within the reach if you were to compare with the 2-story, 3-story shop lots, if you're looking at commercial, am I right? So a lot of times where people, when they want to explore industrial, the first thing come to their mind is big factories, manufacturing. You have silos coming out with all the smoke coming out. That is not really the sector that you are going in. Okay, so now a bit of statistic as well. Industrial property transaction data 2019 again from NAPIC. Now this is an interesting part. Okay, so when you are looking into industrial property, what do you invest? Okay, so now one of the things is this. If you look at it, out of the total of unit of property transacted in the whole of Malaysian industrial, almost 2,000 is terrace factory, 1,005 semi-Ds, 742 detached. All right. Then you have industrial complex and others could be land or industrial industrial land or any facilities that is actually classified under industrial, like for example facility in free trade zone in ports as well. So now the interesting part is this. Terrace semi-D detached. This is a very good segment to go in, especially for those who are not very familiar with industrial property. Number one, they are very well within the reach of everyone's what you call bullets to even invest. All right. Now if you look at this, what is the average pricing? Average pricing 2,555 transacted is above $1 million. Okay. Now then the statistic doesn't show is how many million above 1 million. Am I right? I will share with you some information later on. This is what it is. Last year, there were 6,261 transactions in the primary and secondary market. Now, if you look at it, 6,261, and if you look at the terrace semi-D detached, which is about what, 2,000, 3,005, about 4,000. So you are looking at about these three sectors, terrace, semi-D, and detached. This three sector itself is 4,000 out of 6,000. We are looking at about 71% of the property transacted under this classification. And this is where the market that you want to go in for a very simple reason. Now, when you say it's a niche market, unless if you invest in industrial complex, where the volume of transaction is very little. And yes, the industrial property sector, of course, is only 10% of even the residential. Yes, on that sense, you can say it's niche, but within so-called this niche market, you need not to go into a niche product within the niche market. That is the point I'm trying to make. Now, the situation is this. When you go to a niche product within the niche market, your commercial risk of investment is higher. This is what I always believe. Anything that is niche is either you get it or you don't. You know, it's like you play golf. It's either you put it in the hole or you don't. You can be so close to it and it doesn't go in, means you know, you are not putting the ball into the you know, into the hole. So another word is this. Now, first thing first, industrial investment is not a niche market. All right. Yes, the volume is less, but within this industrial, go for this three sector, especially if you're looking for terrace, you will be quite pretty safe, lower commercial risk. Okay. Now, let's look at transaction by states. Okay. So now, this is what I always believe. Investment is a business. All right. So you got to go to an area or to a segment where there is a certain market share. Am I right? Again, this will reduce your commercial risk. Of course, then you know, the other side of the story is then the competition will be there. So so selecting a right property, you know, having the right fundamentals is extremely very important. So this is a transaction by state out of the 6,261 property, industrial property that is being transacted last year. Selangor clocked the largest, which is about 2,212. So you're talking about 2,000 against 6,000. You're talking about 30%. Followed by Johor, by Sarawak, by Perak, and the rest of this. So now, so let's look at investment. First thing first, there must be a certain market share. There must be a certain transaction. There must be a certain demand. Am I right? So if you look at it, for those who are in Selangor, Selangor is one of the best places that you can invest in the industrial property. There are so many opportunities over here. You know, I get really excited because everyone is talking about the buyer's market now. There are a lot of good buys out there. Now, this is not across the board. All right. This is just from a few phone calls that a client approached me over the last 2-3 weeks. Okay, and some of them were sharing with me that the property that they were looking at before the MCO, and right after the MCO, the price dropped by 20%. Now, this doesn't represent the market. What I'm trying to say is this. Okay, When I say a 20% drop doesn't mean the whole market will drop by 20%. Maybe yes, maybe no, I do not know. I'm not going to make a comment on that. But investment is all about seizing the opportunity. And always remember, it's a willing buyer, willing seller. Am I right? So times like that, a lot of businesses are being affected. A lot of owners who own industrial property, they may be affected, and they may just want to liquidate for a much better price. That is where seize the opportunity. My advice is don't have to look far for those who are in Selangor. It's just right at our doorstep. About 35.3 transaction happened in Selangor. Now let's look at the demand versus the supply. Okay, so this is all about demand and supply, about the demand and supply. I'm going to share with you some statistic and how do we even make sense of the statistic, because I do a lot of research analysis, I give consultancy, and when I talk to a lot of clients, they'll be giving a lot of statistic. They'll be saying, oh, there's a lot of overhang, the market is bad, blah, 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 everything. The most important thing is this: how do you even make sense of the statistic so that you can actually make a better decision when you're looking into a property investment, and in this case, industrial. Okay, so let's look at this. Transaction last year, as we know, is 6261 at the bottom over here. I've shown the earlier slide, about the about 30% is terrace semi detached. All right. Now let's look at existing supply and the future supply. So this is an existing supply that's already in the market. Now future supply are those that is planned stock or those that is under construction that is not completed. So existing is already in the market, that is already handed over either with or without buyers. All right. So so a bit of a statistic. It may not really make a lot of sense, but there's a reason why I'm showing this. So if you look at it, Terrace Factory transaction last year is about 2,000. Okay, and you have a future supply coming in of about let's say 3,084. So you know that the future supply is going to be is actually double up of what was the last year's performance. If you look at semi-D, 1,005 transacted last year, about 3,924. So it's actually more than double up in terms of factoring of future supply versus a transaction last year. And if you look at detached, this is the one that assuming this is about 750, so this is at least about 4 to 5 times. Now there is a great implication on demand and supply. Let's not delve too deep into this slide. Let's look into the comparison. I will do a conclusion of this statistic shortly. Now, let's look at residential. Okay, so we all know that residential forms a large part of the market share in terms of the property that's being transacted, and that is fair enough. That is fair enough is because that is one of the easiest to actually to purchase a property for a very simple reason. Yes, a lot of product can be on the lower ticket item of 500,000 and below, and the so-called innovative packaging the developer has been doing over the last 10 years. It has also changed the way a lot of consumer or a lot of investors invest in property. One of the things is always an easier entry. And then, and anyone can own a property. At one stage of time, many years ago, you don't even need a single ringgit to be able to own the property. Now, whether it's good or bad, this is not the session today, but what I'm trying to say is because of all this packaging that allows easier entry, some of you out there could have made a lot of money or may have lost a lot of money. This is what I always believe. Don't blame the packaging, don't blame the developer. Is always a fundamental of the property. All right. So the fundamental to me is the very basic, the very traditional way is you look at the demand and supply. Okay. So now this is the part in terms of residential. For residential, if you look at it, 85,000 terrace, high rise 32,000, vacant lot 30,000. And if you look at it, transaction data of 85,000 against the future supplies of 300,000. Okay, may not even make sense. Where I'm driving through is this is what it is, and again, this also wouldn't make sense of at all if you ask me, because how can you even make a financial decision in terms of just looking at this? Okay, so if I were to show you the terrace houses, landed houses, overhang stock as of 31st of December is 15 billion, 17,000. High rise, this is the part a bit scary, 30 over 1,000 and worth 18 billion. If you look at the industrial, industrial is 1280, 1.87 billion. Okay, so obviously you'll be looking at, wow, then industrial is actually a very good sector to go in. But absolute number itself doesn't say anything. All right, this is the graph that I want to show you now. What is the ratio of overhang and future supply versus 2019 transaction? So that is as much data as we get. All right, now one of the things is this: when I share this statistic, you will be able to make a deduction even on your own to see whether will there be an increase of overhang stock in the future, which will be the sector that you will still see that the overhang stock keep increasing in the next 1 to 2 years. So a simple summary will be this. If you look at it, I just use the landed apartments and industrial. Transaction last year, as what I've shown you earlier. Okay, existing supply, as what I've shown you earlier on as well. Overhang, 17,000, 30,000, 1280. Future supply coming in. So this is the part, all right, when you have a lot of future supply coming in and your demand, you cannot absorb that supply that comes in fast enough, overhang stock will definitely go up, am I right? And we all know that basic demand supply, when you have a lot of overhang, means your investment may be affected, and it will very likely be affected. I'm not going to go into a detail. Again, just look at the ratio. Overhang plus future supply versus 2019 transaction. For landed houses, for apartments, this is 4 times. For apartment, it's 12 times. Meaning to say, just a very layman analysis, not taking other variables into consideration, all right? In ballpark figure, if you look at that apartments, future supply coming in, and future supply is 362,000, and last year there was only 32 or 33,000. Incoming supply or future supply is 12 times higher than what was transacted last year. So, so 2 things will happen. It's either the volume of transaction for apartment goes up faster than the incoming supply, so that the overhang stock can reduce, or the future supply further reduce at a faster rate. But you know, future supply plan stock means whatever that's under construction today, or whoever developer that start construction and start their first billing, construction cannot stop. If the stop means then it's an abandoned project. But you look at the interesting part is industrial. Industrial is only double up. All right. So whatever incoming future supply and overhang versus the transaction of 2019, the factoring is only by 2. So if you look at this statistic, to me, in my opinion, all right, not taking other variables into consideration, there is quite a balancing, or rather the demand and supply is quite balanced out, all right, so to speak. Now, bear in mind, in the whole of Malaysian market, the only year there is no oversupply of property was in 1988. So if you look at 1989 and all the way until today, there is always an overhang of supply. The only thing is over the last 4 years is, it come to quite a critical point, I say, all right? So now we in all this sector, industrial, think about it, think about this, factoring of 2, you will already know that, the demand and supply is quite pretty well matched. Okay, now different types of properties that have proven to be profitable. Number 1, industrial factories. I started my first investment industrial factory, that was back in 1999. In fact, it's one of these units, not in this picture, but it's just on the other row. Just to give you an example, in 1996, the developer sold it for 450. During the boom before the 98 crisis, it was transacted at 900 over 1,000. My first investment in industrial was a unit very similar to this, just a couple of units away. During the downturn, I bought it for 450,000. with the rental then was 2,000, which is quite bad because those days BLR is very high. Okay, but within 2 years, the property recovered to about 1.1 million and my rental went up to about 5,000. And today, easily, highest transacted in 2019 was at 2.4 million. So even if you give it a 20-30% down, all right, it's still money making. So I think one of the basic fundamental of investment, the so-called, not to say the so-called old-fashioned way is you must be able to hold your properties. All right. So if you don't, if you speculate, again, I'm not going to say it's a wrong decision. Then you got to manage your gearing very well. Okay. So the other type is semi-D. Semi-D is a very interesting product. Why is that so? Now, in the Malaysian industrial sector, in terms of development, there was actually a boom of semi-D development from 2008 for a very simple reason. That was actually a point where there is actually a certain parts of in Malaysia, especially in Glenmarie, and I see it very clearly where semi-Ds are being used semi-commercially. For example, you start having a car service center and car showroom. Those days are 3S. Of course, today it is more than 5S. All right. The traditional way of let's say a car showroom is the showroom will be in the shop lot. Okay. The workshop will be the service center will be in the factory. Am I right? So so you can't have a car showroom. Imagine you are selling Mercedes. You can't have a car showroom in an old industrial area where it's messy, it's dirty, and it's not being well kept. But in 2008, there is a trend of a lot of car industry going into a semi-D, as what you see over here. This is in Glenmarie. For example, in Glenmarie, all the major brand of cars is already over here. You're talking about Porsche, you're talking about Lamborghini, Mercedes, BM, Honda, Kia, Honda, Hyundai as well, and Audi. So now, there is a reason to this. Imagine if you buy a land, industrial land, if you compare within the same area, more often than not, is actually much lower than commercial land. Construction cost is pretty much the same. In fact, construction cost for a industrial factory is actually lower. So when you buy a land, okay, industrial land, you spend less per square foot to build an industrial semi-D, and yet you can rent to someone that is operating semi-commercially, I call it. Why not fully commercial is because a lot of all these semi-D and terrace, you cannot run it for F&B, but you can do it for showroom, you can do it for even an office, you can even do it for a furniture showroom, and the rental for commercial tend to be higher per square foot than your industrial. So if you have a lower construction cost, you have a lower land price, and your rental is just slightly below the average commercial, meaning to say your return is actually quite pretty high. At one stage, a lot of semi-Ds, if you were to buy in 2009, 2010, you are not even surprised you can get a 9 to 10% return. And those days interest rate, I think it's only about what, maybe 3%. So imagine that. So there was a boom of semi-D factory. However, as usual, when developer start building, there's a lot of people that rush in to buy. Then you got to be very careful. So I'm going to share with you what are the pitfalls to avoid when you look into a semi-D industrial factory, especially. Now, the third is, of course, detached factory. Detached factory itself, this is a situation for a detached factory. The same factory that you see over here, if you, let's say you put it in Balakong or you put it in Glenmarie, exactly the same. Just imagine you take a helicopter up and you lift the whole thing up. You put in Balakong, you put in Glenmarie, and you put in Northport, Port Klang. Is a very different category, even though it's the same physical structure, but it will behave so differently. So another word is this: whatever investment that you make, it could be residential, industrial, commercial, it could be anything, or every business that you do, you want to see the return, you got to know who is your customer. All right. So when you look at, especially for detached factory, Just don't look at the facade, just don't look at the spec. You have to look at who are your customer, and your customer will dictate what kind of rental that they pay. So it's something like a shopping mall, a tenant mix. All right. You go into a shopping mall, those who are familiar with tenant mix, you know that mall owners will give what you call a mini anchor tenant like grocers a much reduced rental. They will also give certain tenants even a free rental because they want to attract them. But when it comes to F&B, the F&B will tend to pay the highest, even though it's within the same shopping mall. This is exactly what they did. So you've got to know who is your tenant mix. So there are three categories over here, but the one that easily that you can go in is link factories. Link factory pricing is in a good area is about 2 million plus and minus. Semi-D is in a good area, all right, is about 4 to 6 million. Detached factory, it varies. Yeah, so these are a few. Now, of course, these are a lot of latest design of industrial property that you got to be very careful of. They are very nice. This is a terrace factory, very different from what you will perceive how factory lots are. This is a semi-D, and on the bottom right here is a semi-D, and here is actually a detached. Now, because of a lot of development, all right, since about 12 years ago, now one of the way is to have a very nice facade. You can't just do the traditional facade. However, the fundamental has to be there. The fundamentals of, let's say, for example, industrial property is the height, is the width, is the accessibility, is a floor loading. These are the things that you will need to look into, not just a facade. All right. So I'm going to share with you a bit of a pitfall later on. So the first thing is this: who will be renting? Who will be buying? Again, it's like you're going to have a mall. Then you got to know which area, which unit you are targeting, what type of businesses. So this is always a very commonly question people ask me, especially for those that are not familiar in industrial investment. Who will rent, Aldrin? I don't see shutters are open. I see most of the shutters are closed. So when I tell them that, look, they are occupied, they will be like, huh? And out there, there's a lot of I would say gurus that will guide you how to invest. One of the things is when you are looking into apartment, how do you determine whether the occupancy rate? So the very usual thing that they will tell you is you drive there at night, you see whether how many lights are on. Yes, okay, that is one of the strategy. But when you come to industrial, certain part of it, when you go to industrial area during weekend, you go to industrial during at night, or you go to industrial like let's say for a terrace factory during daytime, you hardly see anyone walking on the street. You see most of the shutter closed, and if you're going to do by sight whether that is occupied or not, then that will be a wrong method of using of doing that. So now, who will be renting? To me, I categorize into 6 categories. You'll be manufacturing, trading company, logistic, commercial services, office, and also investors as well. All right. So let's go very briefly. Number one, investors. One of it is a big companies. Now, this is always very interesting, and I always tell my client. All right. Now, REIT company, their portfolio is public knowledge. You can just buy their annual report. You know exactly which property that they buy. Hardly you see any REIT companies that own residential property. All right. In fact, they own a lot of industrial. They own a lot of commercial. They own a lot of malls. Okay. And why is that so? There must be a reason why. REIT itself is they are collecting rental, and then they they are giving dividends. So in other words, the rental return for industrial property or even commercial generally across the board tend to be higher. Otherwise, how can REIT companies still give dividends to their client? Am I right? So that is a operating business of they collect rental and then they pay the dividend to shareholders. Normally, REIT companies will look into detached warehouses. They look at the industrial land. And so this is what REIT company does. Private investors, of course, pretty much the same: link factories, semi-Ds, detached, and also industrial land as well. Now, for those who are not very familiar with industrial development, investment, and if you want to get into this sector, personally, in my opinion, between now and next 12 to 18 months will be a good time. I'm not here to push any product to you. Study the market of industrial, and you will see very interesting deals coming in. Go with link factories with semi-Ds. You will be quite pretty safe. Link factories is one of the safest, all right? If you were to ask me, semi-D in comparison with link, the risk could be higher because for a very simple reason. Over the last 10 years, there are more semi-D development as compared to link factories. So as a result, the so-called appreciation or the hike in price of semi-D has gone up faster than the rate of increment of the rental rates. Link factories, there are still people developing it, but not as much as semi-D. So link factories is one sector in industrial sector that is fairly very stable. Okay, so if you're looking at mid to longer term, you want to take a safer route, and you want to reduce your commercial risk, I would highly recommend link factories. But something that is much safer, you don't expect a fantastic return overnight. So against investment. Now, number two, manufacturers, they will look at detached houses, they will look at industrial land. Now, one of the things is this: if you are investing in the so-called bigger ticket item like detached factories, so this is where you got to be very careful. Or even if you are a real estate agent, let's say doing industrial, you have to look at how the sector actually, what is the volume of transaction. Now, you think about it, manufacturer, when they move, they will plan for at least 10 to 15 years because of whatever machineries or production plants that they put in. This is business decision. They cannot be moving every 5 years. Their planning is at least a 10 to 15 years. So meaning to say, if you are investing in an area where most of the occupant manufacturers, you may seriously want to reconsider. I'm not saying it's bad to go in, but the volume of transaction is going to be low. But that doesn't mean it's bad. However, if you have any vacant unit, it may take a longer time for you to get a tenant. All right, lower volume of transaction. Trading company, traditionally trading company, trading and distribution companies, they will look into link factories. They look at the semi-D. So a lot of people ask me why link factories, the shutters are closed. For a very simple reason, a lot of them will keep their goods, could be a distribution point, and they are not doing retail. So you have to always remember, industrial is not about doing retail. It's very different from your normal typical shop lot. All right. So trading companies will look at the detached factory warehouse as well. Now, however, this is a trend. All right, this is a trend. Traditionally, when you are a trading company, you have your own goods. You will have your own warehouse. Maybe you go for semi-D, you go for detached. But over the last few years, a lot of all these trading companies are outsourcing to third-party warehouse, to logistic company. So there's actually a shift of how the link factories and semi-Ds are being utilized in certain parts of it. So you got to be a bit more detailed and to analyze as well. Okay, so logistic and logistic company. This is the one that there are so many people are talking about it. There are so many reports written on it. People who invest in detached factory warehouses. People went crazy rushing into buying it. It's expanding. You're talking about in Malaysia now, it's working towards the same day delivery. There are facilities that is being planned now towards the same day delivery. So this is one segment that is still pretty very healthy. It got to be near seaport and airports as well. It needs good accessibility to highways. Very, very important. Commercial services, company that use it for semi-commercial usage. Number one, car showroom, fire center, curtain shops. And semi-detached has semi-commercial value. There are people who also use it as an office, which I'm going to show you in the next slide. All right, office. Why? Because lower rental, cheaper parking, and I just showed you earlier on the facade of some of the latest MEDs, not latest, over the last 6-7 years, they look even nicer than your typical 2 to 3 story shop lots. I remember one of the project that we were selling in 2008 by Paramount in Kota Damansara, near Pasaran Surian. We were selling SAMED in 2008 for 3.5 million. We are talking about 2008. Market wasn't that fantastic. And at that point of time, when Paramount developed that, we were the appointed agent, and that was the highest SAMED price that is leasehold, that is in Kota Damansara, that is quite well developed, but not as much as today, selling at 3.5, where the other areas like in Glenmarie, that is more mature area then, was selling only at 2 over million, and yet the 50 over unit was just sold within about 12 months. So I personally those days did about at least 7 transactions, and you know who were the buyers? They were the buyers, tenant and occupier of Dataran Sunway, you know, where the Starbucks is in Kota Damansara. I think now it's next to Giza. For example, a 3 over million of a SAMED is about 4,000 over square feet against a corner lot of 4 to 5,000 build up, and the corner lot of a 3-story shop then was worth more than 3 over million, and parking is horrendous in Dataran Sunway. So what they did is they come over here to Surian. Facade is nice, 2-story, and even come with a lift, and you have your own parking. So that is where you know, a lot of these amenities are also being used as an office space as well. It does make sense, really, because per square foot is cheaper than commercial. You know, even if you rent, it's cheaper than commercial. You get your parking best, you know, it's internal parking is free. I mean, you pay for it, nothing is free, other than you pay your parking. All right. So common pitfalls to avoid when investing in industrial properties. Okay, if you are, there's actually a lot, but I'm just giving you something that is very commonly that you come across. Now, number one, if you are going into a terrace factory, the width is very important. What you see over here is 25 feet width. Go for at least a minimum 30 feet. Okay, 20, 30 years ago, we even have 20 by 80 or 25 by 80. Today, it has to be a minimum 30 by 80. All right. If you can go for 35, it's the best, but not many around. Go for a minimum of 30 feet. In terms of that, minimum is 80 feet. All right. The other one will be, if you look at it, the eaves height of 25 feet. That is already the bare minimum, and it must have a double volume, so to speak. If you see over here for link factories, some of the link factories or some of the SAMEDs do not have double volume. That doesn't mean it doesn't work. Again, it will depend on where the location. When I say the location is how so-called commercialized is that area is. All right. So if you were to buy a link factories or a SAMED where you know that people will not be moving it solely for an office, then they may keep some goods, or they may need to do some servicing of tools and parts. Then you will need to have a double volume. So the eaves height is minimum 25 feet. Okay, so if you look at SAMED, so this is one typical SAMED development that is in the market. You look at this now. How do we even make sense of this picture over here? So the shaded area is 30 feet high. Okay. Then what you have? Okay. Normally the red color area would be the warehousing or your storage area. Then you have your entrance here, your lobby. Then you have always a mezzanine floor where a lot of people use it as an office. Then you have another floor of office. Then you have another floor of office. Then you have another floor of office. Now the thing is this: whether this product will really give you that kind of return that you want will depend on the tenant mix in that area, so to speak. All right. What kind of people will be renting? Would it be a tenant that will need 1, 2, 3 floor office space? If let's say it is in an area, the facade is so nice, all right, everything is very well planned. You have a 30 feet over here, it's actually 29 feet, 29 to 30 feet. You know, if you look at the far right here, the facade is so nice. But if you invest in this property, in a property similar like this, and it doesn't really have a commercial demand, then you will have problem of not able to rent your upper 2 floors. Again, I'm not saying this doesn't work. You got to be very careful on the market. What is a tenant segment in that area where this property is being located? So one of the very common thing why developer will build a lot of floors is for a very simple reason. It's land economics, unlocking the value of your land. Some of you will know the plot ratio. The more you build in the air, the more money they make. Am I right? Because land cost is already there. You know what I mean? So you got to be very careful, especially when it comes to semi-D. And this is a trend that I see. I'm not saying it wouldn't work, but you just got to do a bit more analysis. All right. Okay. The other thing is a common pitfall. This is a typical link factories. And this is the one that you see nothing much happen. I'm not saying this will not be a good investment. It's a different category of tenant. Different category of tenant, this type of tenant that is doing trading, they will not pay you that kind of rental as high as what you see over here. This is also a link factories where there is a post-laju there, there's a golf shop over there, there's a car service center. Now, they are both link factories. This is a different category of tenant where the average rental is higher, meaning to say the property value obviously will be higher. All right, so my point is this, because of all these link factory or semi-D where the rental, they are able to command a higher, that actually pulls a lot of owners who own semi-D in areas or link factory in areas like the slide previously where they will also want to sell at a higher price. So you have to remember who is your tenant, what is the rental they're going to pay will determine what is the your rental return. So change of usage and multiplier. This is already happening for industrial, say about 10 years ago. Very simple analogy and similarity. You look at Jalan Maruf, they are residential. Of course, they are limited commercial. You get a yearly license. I remember in the mid-90s, when I got a client, I start picking up all these bungalow houses, and I was asking her why. She said that she can rent it out, even to those days they initially wanted to rent to a restaurant. It doesn't work, then they start renting to offices and showroom. The return is there. All right, property prices went up. You look at SS2 in the middle, you look at SS2, all the wedding gowns, showroom, they are there. So this is what I call the change of usage, where you acquire at a lower price of a different category residential, then you are able to rent a higher rental. Okay, so again, that is for residential. But if you look at industrial, this is in Jalan Kemajuan, okay, behind Jaya 33 or Jaya 31. If you look at here, the middle over here are actually restaurant. There's actually a showroom over here. Now, these are all old factories. These factories has been there, I think, about 40 over years. Okay, some of this area, there's a close by Nissan showroom. Behind that, there's even a university that rented a factory to turn into a university. So the usage is actually quite versatile. All right. So when you have a change of usage, meaning to say your return is higher, something like Jalan Maruf. Again, in Temasha, Glenmarie, people are using it as a car showroom. If you look at in Glenmarie itself, even there is a bank that occupy a factory. So you see, how many banks actually occupy a factory? Majority don't. But if you have industrial property that is in quite a good commercial areas, these are the type of tenants that you're going to have. All right. So so you must be able to distinguish that. Now, economic lifespan of industrial properties, if you look at the whole slide in front, now think about it. Think about what we see. All right. Think about how development is in terms of town planning, in terms of urban development. All right. More often than not, this is what you're going to see. Your commercial development will start encroaching into your old industrial area, where an old industrial area will go under a redevelopment that turn into a commercial. For example, PJ51 is an old industrial area that is already being commercialized. All right, the land over there is already, some parts of it is already zoned commercial. So another word is, you just look at the encroachment of it. Very rarely you will see industrial area encroach into commercial or encroach into a residential. And also a lot of commercial will start encroaching into a residential. Am I right? So now we are talking about industrial today. So the spillover is this, all right? What makes a difference over here now in terms of lifespan? So if you buy a property now, generally, if you are comparing the different types of land within the same area, generally industrial per square foot land is much lower than commercial. Okay, and it happens in almost all the areas in Malaysia. Okay, let's not talk about exception. So now another word is this. So if you buy an industrial property, probably 30, 40 years ago, all right, so you have a factory over there. So over the years, there's a lot of diminishing effect. Your property get older, and maybe the design get outdated. Am I right? So it's either you tear down the whole thing and you rebuild something new. So that even makes sense. But you see, the best part of it is, if let's say the commercial development has reached to the doorstep of where you invested 30 years ago, all right, and if there is a zoning of industrial by the town planner and change to let's say to commercial zoning, this is where you will make a killing, all right, because commercial, your plot ratio is much higher. In terms of feasibility of any developers were to go in and develop and sell, it makes a lot of sense. So another word is this, industrial property. We have seen it in many areas. Already happened in certain parts of PJ50, PJ51A. Glenmary itself on the main road, some of the industrial property has been changed to commercial status. Yes, you have to pay a premium, but however, your plot ratio will go up. So this is in terms of lifespan, there is a upgrade of category. All right. So can you imagine your residential in Jalan Maruf? If the government decide, all right, now it's limited commercial just based on usage on yearly license. What if the state government decided the whole of Jalan Maruf today, the residential land, we will zone it into commercial? That will really increase the price over there. All right, so if you go into industrial, especially if it's semi-D or even detached, you will quite likely, if you pick the right location, you can even upgrade your so-called your usage by rezoning into a higher category of usage of commercial. All right, so that is my sharing today. So thank you very much for those who are online. You can follow us on our Facebook, and you can get a lot of information. We don't push product in our Facebook, so it's just a lot of information contents and market updates as well. All right, so Casey, thank you so much. I think I speak a bit too long.
No, that's good. Thank you very much for sharing all this information. So guys, if you want to have Aldrin's team to help you on industrial property investment, of course, you can follow them or you can contact them. Just search Esprit Estate Agent in Berhad. Do you have a website?
Yes,
you want them to follow you on Facebook?
On the Facebook will do. We have a website. Is www.espritestate.com.
Espritestate.com.
Yeah, it's in our Facebook page as well, the website. Yeah, the link.
Okay, awesome. So guys, if you have any question you want to ask about industrial property investment, you can type in the Q&A box so that we can get to your questions. And before we do that, I'll just do a simple poll to ask how is it going for you guys? Did you learn something? So I'm going to launch it for you to cast your vote, right? If you want Aldrin back to share more information, please don't cast anything less than 4-star.
Okay, see, this is like going into an exam, oral exam. Oh my God.
No, you are getting very good response, don't worry. Okay, awesome. So now let's get to some question. Try to ask a question that Aldrin can help you. So I can see the first question here by Yvonne. She's asking, can you share some names of REIT company, the REIT listed company who have good track record in industrial properties investment in Malaysia and global? Do you look at that, or it's just individual property you are looking at?
Sorry, what's the question now? What is the
yeah, Yvonne is asking, can you share some REIT company that you maybe find interesting that is have a good track record in industrial properties
I think in Malaysia, one of it you can look at Axis REIT. All right. You know, when I look at their portfolio, very sustainable. And I think to me personally, I think the risk management they have done, I think is good in terms of you know, I wouldn't name other names. There are some REIT company that actually goes into same day delivery facilities. There's one that is actually very close to KL downtown. You know, if I were to mention that, you'll be probably thinking, huh, is that even such a warehouse in that area? You know, but it's less than 4 kilometers from KLCC area. I'm not saying it's not good. You know, same day delivery is still something very new. But I think if you are looking into the REIT, okay, then I think you got to really look at what are the portfolio of the properties, and one thing about the REITs is you got to know who are the tenants. All right. Now, logistic company, not short-term tenants, but they are shorter than you know, some other types of tenants. So so you got to be pretty you got to really analyze.
When you say short, for the logistic company, how long are we looking at? Like 3 years, 5 years? Or?
Pretty difficult to say, but averagely, because our site here, we also do a lot of logistic placement. So on yearly, there's more than 1 over million of square feet that we transact. You know, the statistic is you know, it's at least for 3 years, because one of it is because it's pretty much it's tied down to the contract, all right, of the client. So the contract is also you know, could be up to 3 years or 6 years. So it really depends. Yeah. So yeah.
So among the industrial properties, tenants mix, right? In your experience, according to your experience, so what kind of tenants is the best? So like if you have rented your property to this tenant, you will be like rejoice, or you don't have to worry about the next 20 years or something.
Wow. Personal experience lah. Okay. May not really be also for industrial lah. This is what I always believe. That's what I always tell my client. You know, if you have a tenant that is doing extremely very well, chances is they'll buy a similar property and move into the same area. So you are not going to get a good tenant, so to speak, because you have to change tenant. If you get one very bad means, well, you are not able to collect a rental. So get one that is doing pretty good. They are still working very hard for the business, and they need the space. But I think one of the things is actually services. All right. Car service center, they will tend to be very long run. You know, even showroom as well, especially maybe for car showroom, even for offices as well. All right. Generally, if you look at it, offices, the planning is also long term. Okay. You know, like for example, I just moved office. My planning is 6 years. All right. So in terms of budgeting, everything, so it's 6 years. So and people tend not to move offices. You know what I mean? If you go into a commercial area, yes. If you look at the trading, I will also say yes, but I think mostly services. I think that is the one that is relatively more stable. Yeah.
What kind of services? Like you mean car?
Okay, services like
one of it.
Car service center is car service center is services. Let's say for example, in a service industry, it could be even a consulting firm that rent a factory, a terrace factory that is about 4,000 square feet to use as an office. You know, these services related, even like for example, I show you the picture earlier on. Post Laju is in one of the unit owned by a client of mine. I sold that property many years ago. I think Post Laju has been there for 10 years. You know, so if your payback capital is about what, 15 to 18 years or maybe 15 years, so it's 3/4, you are already home run, so to speak. You know what I mean? And you are 3/4 home run, and if you even need to liquidate and you already hold for 10 years, chances is you can still liquidate fairly good lah.
And usually industrial properties, the loan will be shorter, like it might be 20 to 25 years, is it?
20, 25 years, yeah, about 25 years.
That's the typical
yes, that's right. Yeah.
Tenure for mortgage. Correct. Of industrial property. So like you say, if Post Laju rent for like 15 years, is like what, more than half of the.
Yes, that's right. So in terms of
your installment covered, right?
Exactly. And I wouldn't say whether property will double up in 10, 15 years, But definitely any property that you hold for 10 years, you know, you will tend to make money lah. I mean generally lah. Okay.
I kind of agree with you that you say that some of these like services company, they don't buy the property outright, right? So but some kind of like SME, if they outgrow your property, they will move, right? Maybe they expand a lot, they're booming the business, then they'll have to move out of your property.
Yes, that's right. And I think one of the things is because there's also a shift of change of industrial properties, especially link and semi-Ds in a more commercial area. So that actually widens the market segment. So it becomes more versatile. So wider market segment, more versatile means you know, the market share of the tenant mix is wider. So it's something that you know, you will keep up with the demand. All right, or rather the demand will keep up with the supply. So if you look at specifically that sectors,
Okay, awesome. Let's get through some question quickly. Freehold versus leasehold for industrial property like terrace factory. What's your opinion on that?
Freehold and leasehold. Now, to me, it depends on which angle you look at. All right. If you are just purely looking at a return and you know, it doesn't really matter in terms of rental return, because location is important. In terms of appreciation, yeah, it does. You know, when your lease is 60 years and below. But one of the things is this: if you are going on, let's say, a land, all right, industrial land. And let's say you're going for industrial land and hoping one day, you know, the state government will change the zoning of that area to become a commercial. Then from that very specific aspect, of course, freehold will be a better proposition. You know what I mean? But I think if you look at, for those who are looking at link factory, semi, these won't make much of a different one. You know, I invested in Kota Damansara. It's a leasehold in 2009. You know, it's still good, because the situation is this. All right, it depends on your payback capital. Then it will depends on during this payback capital, your property still continue to appreciate. If yes, it's, you know, it's good. All right, unless you buy a leasehold that's 60 and below, then I think you know, may not be as fantastic as freehold. But to me, generally, any lease that is still 80 and above, you can still safely go in. Yeah,
as long as the location is okay.
Yes,
so
that's right.
what are the expected rental yield for industrial property, like gross rental yield for a year?
Wow, expected rental yield. Okay, that's always $1 million question. This is what happened. All right. So if you look at detached factory warehouse, now one of the things is this: the rental rate for detached factories has been rather stable or rather stagnant over the last 8 to 10 years. All right. For example, like in Glenmarie, used to be $1.50. Today is still about $1.50. 10 years ago, 50. Today is 50 as well, $1.50. Land prices over the last 10 years has triple up. All right. Construction cost has also gone up by about 30%. So definitely rental return has gone down. Generally, you can still go into areas that you are able to get about 5% return, which is not too bad. Not too bad. Some link factories are able to give you about 5.5. You know, some areas that is close to Kota Kemuning. How sudden there is a name. Just right the entrance of Kota Kemuning on the left. Some of the terrace factory you are able to get 5%. So now averagely, link factories, detached factories give you a better rental return in terms of a semi-D, and there is a reason. As I shared earlier on, over the last 10 years, there are more semi-Ds development that's being developed. You know, when the demand goes up, you know, developer will increase the price. Rental rate doesn't really go up. It's not able to catch up. So now, but that doesn't mean there is no opportunity. You know, we have a couple of listings where you know, from 5.9 million before MCO, today they are willing to let go at 4.5. For a simple reason, they only bought it for 3 over million. If you need to liquidate, means you need to. So it can be a one-off case or the minority of the cases, but like I said, this is a good time to pick up, industrial factory, link factories, terrace factory.
So
my
due
advice
to the
is,
pandemic, is really like affects some of the industry, and some businesses might need to liquidate their properties to improve their
yes,
cash flow, right?
that's right. Yeah, that's right.
Okay, so
Don't rush into it. A lot of goodies are coming. Yeah.
can still shopping, right?
Yes,
Okay,
yes.
let's get to one more question here. Is what if the width of the property, the industrial property, is less than 30 feet? Like you suggest, you give a very good pointer. Find something at least 30 feet width. So what if it is less? So what is the problem with that?
Okay, what's the problem? Okay, an example. All right, Bukit Jelutong, I Park 1. Okay, Bukit Jelutong I Park 1, where the semi-dis I think was handed over probably in 2012, 13, 7 years. Not too bad. I'm not saying it's bad. All right, it's the rentability. All right, I remember my agents was penetrating that area. And for 1 year, there was only about, I think, 4 or 5 tenant move in that development. One of the things is because the width wasn't 30 feet, it was 25 feet. Now, the thing is that why, rentability goes down. Now, if you are looking at people who are using as a storage, all right, where they are racking. I'm not talking about warehouse racking, that sort where you use a forklift. Just a racking that maybe you can see probably like a typical hardware shop, those racking. There are limitations when you look at 25 feet. It's for a very simple reason. If you look at terrace, the width is 25. The stairways to the first floor is already taking probably about 6-7 feet of the 25 feet. So another word is the front portion of it, where the setback for the stairways, it's only about 19 feet. So there's actually a limitation over there. So that explains why 30 feet, so that your net width at the front portion, you will get at least about 25. Rentability will go down. I mean,
Yeah, so there'll be less tenants who wants to rent your
Yes.
place, and due to
Yes.
the not enough width that can allow them to work comfortably, right? So
Yes, that's right.
okay, good. Yeah, thanks for the pointer. And let's just answer one more question before we end this. Let me see. Okay, I think this is a good question. But what is the average eaves height for normal industrial property usually?
Wow, average. It really varies. If you're talking about detached, it varies. Those older that is built probably about 40 years ago. You'll be looking at the eaves height of only 20 feet. But averagely, there's a lot of 25 that's being built that is about 20 years ago. But these days, a minimum of eaves height of 30 feet is a bare minimum for a detached. So if you look at link factories, it's usually about 25. Those that is built by developer. Now, detached factories, quite a lot are built by private landowners who build. All right. So to answer that question, I think across the board, averagely for any factories that is built earlier on, even up to 2012, 13, 14, you will definitely see a double volume and with an eaves height of 25. So 25
At
is
least 25.
at 25 is that figure that you want to look at.
Okay.
Yeah.
So just another question. So we see that some of F&B like restaurants, they actually move into the industrial area. They're moving closer to where people work, so they get the business.
Yes.
So is there something we can look into as an opportunity or something? I mean, is there some industrial property that you cannot do F&B at all, or is there
Yes.
any limitation?
Now, by the local authorities, there's actually a lot of restriction. Okay. These are still categorized under industrial. All right. Now, if and unless, all right, the local authority have a limited commercial usage. For example, I show a picture just now, Jalan Kemajuan. behind Jaya 31 next to the Nissan showroom. You know, there's some restaurant over there. That itself, that jalan itself, MBPJ actually has limited commercial usage for the industrial. Just like Jalan Maruf is a residential, but you can still run a showroom, all right? But in Jalan Maruf, you notice there is no restaurant because limited commercial will be detected by the local authorities. All right. So if you are going into an area where hoping that you can have restaurant coming in, restaurant tend to pay a higher rental. Obviously not over the last, I don't know, this pandemic, I think a lot of restaurants are being affected. But once the market recovers and if it doesn't change the way we consume our food, one of the things you got to be very careful is you got to check with the local authority. And bear in mind, these are limited commercial usage where your license is renewable every year. So that's why you see very rarely a lot of industrial are being used for restaurant. That's what it is. Check with the local authority. Yeah.
Okay. Good advice. So thank you very much for answering these questions. And guys, I know some of your question is not addressed, so do me a favor. You can go to Esprit Estate Agent Sdn Bhd. You can go to Facebook and search them, and then you can post your question there. Yeah. Say you attend this webinar, and Aldrin, I think your team will be happily answering the question there, right?
Yeah.
Just post a question over there, and then make sure you click like and follow. Thanks, Aldrin. We learned a lot today, and next week we are going to have Ernest Tan. He's an author who is going to share with us about raising financially savvy kids. So if you are parents, how do we do this? We will have Ernest, the expert, to share with us. And if you want to get the invitation, make sure you are in my email list and follow my Facebook page as well. And if you want to have a full replay, the notes, and download and all the video streaming of all the webinars I've done in the past since 2012, you can go to my website and check it out. You can become a paid member. So thank you very much, Aldrin.
All right. Thank you so much, Casey. Thank you, guys. Catch up with you guys. All right. Stay safe.
Thank you. Bye-bye.
Good luck.
Stay safe.
Okay. Yeah. Bye-bye. All right.
Bye-bye.